Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones, and it's a 2-hour chart. And I was figuring that that we had a little extra wave down through here, so I've made a bit of an error there before we got our bounce here. And I was actually thinking, as I mentioned yesterday, down for 1 here, back for 2 here, down for 3, back for 4, and down for 5 to finish, a bit closer to the 10,000 to get the bounce off there. But that wasn't the case. And on further investigations, that wave 3 here and wave 4 was actually to this high here. So we had our 5-wave sequence within this structure here. So a small mistake on my part there, which sort of disrupted us putting in trades on the short side yesterday. So I apologise about that, but I think that keeping things in perspective at the moment is that many people will be thinking into rushing in and thinking this is the low and the buying and so forth. But I actually see it as a selling opportunity, and we just need a little bit of patience for this to play out here. We'll come back to this chart in a second, but just to get some perspective on this here on the daily chart. This is the Dow Jones on the daily chart here. And this is the medium level here. And we've talked about the medium level before, actually, in the bear market when it came down. And we could probably go back and have a look at that, which was, that's it here. So it did pretty much the same thing here. It came down through here and then it's shot back up through here. Of course, everything's slightly different as we move forward into the future, but the past can be it can be helpful. And this is what we're sort of looking for. We're looking for a retest of the 11,500, the medium level, and eventually seeing it tilt over like this. Now, I don't think that we're going to actually spend this much time here because we haven't spent that much time coming down. We've come down in a much sharper fashion like this here. So what we'll see will be a sharper move. But it just does point out that this is what we'll be sort of looking at. We've seen the market rally now to we'll be looking at a sort of an ABC correction from here as well, by the by, a bit like that there. Once that's complete, then we'll see a move to the downside like that. And that's what we're looking at. We're looking at a larger 5-wave structure in terms from this point here. Bit of a wobbly one, but there we go. So anyway, down for 1, back for 2, down for 3, back for 4 to here, and then down to 5 here. So that's the structure that we're sort of looking at here. So, if we see this, on the long side, if we see the 11,500 become support, well, then we could look at something on the long side and then admit that we're wrong. Because when it comes to trading, I put the trading levels first, essentially putting the price first. That's what we're doing. The trading level is just a concept to break down the degrees of price into certain strength and degrees of strength. And so support on the 11.5 would throw the bias to that direction, the same as it would with the FTSE finding support on the 5,000, which it has, and our local market on 4,000. So support being above a large number means that you don't have to try and get up through there. You're actually on there and you've got support there, so you've got a price to work off. But we don't have that yet with this market through here. So coming back to the 2-hour chart here, you can see that that yes, we have had a rally through here, and we are looking for an A and a B and a C wave back up to the 4th wave of 1 lesser degree. So it may not come back up to the top here in this 4th wave here. It may just come within here. In this length we're looking up through here, we'll be looking for 5 waves in here on a sort of 5-minute chart in there. So we're looking for an A, then it'll A, B, and C for the B wave, and the C wave to move up through here. So I feel that once we've sort of done and dusted here, then we'll move down. Now, depending how far this moves up through here, I don't think the Feds have put their finger on the printing press just yet, but they're certainly putting rates on hold for another 2 years, and that's why we've seen the market move here somewhat. Now, with the distance, if this market moves to the 11.5 here, then that's going to place our market, our local market here, a little bit higher than pulling back up to the 38.2 retracement level that we expected. So if I can just come on here for a moment, this is the 20-minute chart on the SPY. So we would be looking for an A wave coming up here, an A and a B and a C for the B wave, and then 5 waves up for the C wave here. Now this retracement level is coming back up here. We need to talk about this a little bit. First of all, the wave 4s normally pull back 38.2% of wave 3. Now, so that brings it in around the 4,100 by the by, but it also, with fourth wave, they normally pull back to the fourth wave of 1 lesser degree. So we've got this fourth wave in here, so it's sort of pulled back up there. So really it's done its job, really. But you know, when we look at the Dow Jones and the S&P 500, they need to complete a little bit higher. So it is quite possible for this to move back up here quite higher. I don't think it would go past the 4.3, but it could certainly sort of move up here further based on that situation there. So in terms of trading this particular market and so forth, is that yes, we're above the 4,000 there, so that makes life easier because we're not stuck under it. Do you know what I mean? We're sitting on top of it as support, so we've got a platform to work off because the volume will be lifting up through there. So the day traders today can work off the 4,100 and understand the sub levels between each minor level here. So that's kind of what we're looking at there, and this sort of pattern through here is the same for the UK market as well. As you can see here, it's pretty much a normal trading levels pattern where a market comes up, reacts, eventually gets up there, comes back, checks on support, and then sort of moves up from there. But this would be the same as our local market, and also this would be the wave 3. So we're looking for wave 4 to pull back. The 38.2 retracement level is 5,400. The S&P 500, just getting this into perspective here, and that's what you kind of need to do, actually. Do you know what I mean? This is the US markets. So the US markets have already moved. Yes, our markets can move up, but this is the main trend, and this is a rally through here. The wave 4, 1 lesser degree here is at the 1,200 here, so we'd sort of expect it to move back up through there. Once again, we're expecting a little down for 1, back for 2, down for 3, back for 4, and down for 5 here for the low here. That's why I put those shorts out there yesterday, but that wasn't the case. This wave 4 is actually sitting in here, and this was a triangle here, so we had the 5 waves in here. And that's the same as our local market as well, because what we're expecting with our local market is we're expecting the 61.8 retracement level. This is the local market here, coming a 61.8 retracement level of the whole bear market was 3,800 here. So we figured that was our target. We're going to get a bounce off that one, but everything happened really quite sort of quickly yesterday. But anyway, once again, with our cash market, the ASX 200, we'll look at that possibly coming up between the 2 and the 3 here at the 61.8 retracement level there for that. But all eyes on the S&P 500 in terms of coming back to the 1,200 mark there. The drivers outside of the Feds commenting on their situation here, we've got crude oil here, so we can see that the major trading level here, 8. We figured that the market would come down to 78, and also the 76.50, which I pointed out, that was also important as well as a sub-level, and that was our target range there before we see a retest coming back through here. We can see that this market here, this 3-wave structure here, that's a corrective wave there, okay? So that means that this move here is corrective, and it would be a little A, B, and C for the A wave, and then an A and a B and a C for the B wave, and now we're looking for a C wave moving up through here. There can be equality in corrections in terms that the distance here can be the distance here as well. But we're looking for shorting opportunities up at this up here. But if you're going to trade from here, then you just need to keep the stop under the 80 here, and then look for support on the 81, 82 and 83 here. If support can be found on 83, then you can get to the 85. It's simple as that. So the base metals market, right, so pretty much all going according to plan through here. Yesterday we were talking about this market coming down to the 380 here and then retesting the 400 here, the medium level through here. Now this can certainly come back to the 410 or even the 420 there, but this is the main trend, this is a counter trend, and we need to understand how what this pattern is going to be through here. But as you can see here, you know, this is pretty fast move down through here. So a lot of damage is done. The value buys are coming in, but they won't be supported over a period of time. So you know, this will fade to the downside here. It's just checking the supply level through here. The gold market is pretty much doing what we expect, is just working itself up through the levels. And we're looking at this particular pattern here at the moment in terms of an A wave, a B wave into here, and a C wave down into through to here. That C wave may not be finished just yet, but this is a 30-minute chart, but have a look for 1, 2, 3, 4 and 5 down to through to here. The 72 numbers are being quite helpful here. The 1720 here, the 1772 would be stronger because it's got two sevens in there. And yeah, so after this corrective move through here, we can expect this to move up through here. Now the 18 is a profit-taking number. Number 8 is, as we've seen the 8 within here in the 1780 here. This is subgroup 2 area in here, the 65, 72 and 80 as a little subgroup 2 zone. But anyway, look, an A and a B and a C correction. Once this is finished, look for support on the midpoint there and then start to trade up from that point there. But there will be profit taking at the 1800 and also a larger correction at this level as well. 1800 is probably a new number, but you can have a look at any stock at 18 cents or $18 and you'll start to see what damage can be done at this number 8 level here for taking profit. Right, US dollar. Okay, this has occurred since here with them keeping rates on hold for 2 years there. So we're seeing this as a corrective move here. Now, we didn't actually, in the early bird section here, talking about the US dollar and also the euro as well. What we've been discussing through here is we've been discussing not taking a side in terms of Elliott as such, but using the levels of support and resistance to develop a particular certain thought about which way the direction would be going. And we had come to the conclusion that up this end of town here at the 75, if this became support or resistance through here, then we would take it from that point there. So it hasn't become the support that we're sort of looking for here, and we're starting to see this impulse to the downside here. So while the US stock market is pushing to the upside in terms of the Dow Jones going to 11,500 and the S&P going to 1,200, then we'll see this come down and we can start looking at a 5-wave structure. But let's look to these particular lows down here at 73, 72, and the euro on the other side of the fence had support at 142 the last time we looked at it, and we'll be pushing to the upside through here. So look, things have moved on since I've done the early bird report through here. So this will follow stock to the upside, but once again, you're facing the 144 as support, as resistance through here. So you really need that as support through here. So of course, you've got all the sub levels between 143 and 144. We can look at that, but it is that 144 there, the Fibbo median Gann number there, that would be a squaring in the markets there. We've been dealing with this for some time now, this number. We're still flickering across it, so you'd need it as support for that. Just looking at the sub levels here, you can see that I've got it on a 5-minute chart here. On a 2-minute chart would probably be much better, but we'll just sort of zoom in here. This trend up here needs to be corrected, but we can see that the 72's coming into play here, the subgroup 2 area here. You would need that as support before you could even go to the upside. So the midpoint here would be the support here. So just allow, obviously it's 7 o'clock or whatever, so you need Sydney to open, and then you also see Japan open as well for that. But we should see that continue to the upside, but try and get that 72 as support there. The Australian dollar won't be far behind it as well. But what we're sort of looking at here is that we were looking for this wave 3 to come down, and we're looking for a wave 4 to go to the upside there. So the 104 and the 105 is the main resistance point up through here. We'll be looking at an ABC in terms of an A wave, an A, B, and C for the B wave, and 5 waves up for the C wave here. This is the same pattern as the S&P 500, the same pattern as our local stock there. But yeah, so all this price action here will be the resistance here, and that will be at 105 there. But try and break this down. This is a 1-hour chart, so try and break it down further to have a look at the wave structure from this point here. Normally there's some equality between this move through here and this move here coming up there. Otherwise you can do an extension of grabbing this distance from that top to that bottom there and extending out 61.8% and also 1618% as well, which would take you higher. But you know that the 105 is the one that's going to give you the problems there. And this is the Australian dollar on a 2-minute chart here. When a market goes sideways like this, that's a correction in time and not back in price. So it's a stronger correction. So you will see that push up there, but you'll have to work with 104 once you get there. But once you've got support on 104, there will be a correction across there. But once you've got support there, then you can start working with the sub-levels between 104 and 105 there. So just make sure that you understand. Just go through that quickly there. 104 here, you've got group 1, which is 10, 20, and 30. Yep. And then that's all part of group 1. If support is found on top of group 1 here on the 104.30, if not just trading above it but coming back and checking it as support, then you've got something to work off and you can move higher. Normally from 104 we would trade to 103 there and get out, and also navigate through 10 and 20, but get out at 30 here and then wait for the correction. If the correction after that has got support on the 30, you move in, go to the midpoint there, which is the 50, take profit there and then get back in over the other side, then take profit at the 65 and then the 72. Once 72 becomes support again, then you can move back in and then move back in on the 80 as well, and then start moving out at the 105 there. But there's a lot of supply resistance sellers waiting at the 105, so just be aware of that there. Okay, that's it in a bit of a nutshell. Just recapping the Dow Jones here, you can see that there's been a lot of damage down through here. We've only come back up to 11,230 odd through here. Let me just check that there for the close there. That's just bear with me there. I'll just check on that. On the cash market, yeah, look, 11,240 basically. So we're just in here. So just be careful about moving in to where you've got the resistance at the 11.5 here, because that's what we're looking for. We're looking for an A and a B and a C correction to the 11.5 or close to it, and then rolling over from that point there. So I think the focus is better to use patience, and we'll be looking for the rallies to tire out, and then we'll be looking for short trades to go back into the market. If you're going to go into long trades, then make sure you know where you are within the structure, know what price you're using as support, and know what target points you're going to be scaling out into as well. But from our point of view, we consider this a rally that will be short-lived, and the main trend through here will be continuing once this is done and dusted. And you need to relate the Dow and the S&P to all the other markets. Alrighty, good morning and good luck.